Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the today's class, we will be revising all the standards related to reporting. See, whenever the term reporting comes, you have to remember all the standards of 700 series, right? Now, in the previous class, we have discussed audit planning and audit strategy, right? After that, we will be discussing in the today's class reporting. In the next class onwards, we will be covering the execution part. Okay, so now if you see the entire 700 series, it deals with audit report. Okay, each standard deals with a specific aspect. If you see, the question that you might get is why audit report is required. See, the management, they will prepare financial statements. If you just give that financial statements to the users don't believe whether management have correctly prepared the financial statements. So in order to increase the confidence of the users on the financial statements, auditor will audit the financial statements and he will give the audit report. So if you give financial statements together with the audit report to the users, then the confidence of the users on the financial statements will increase. That is the reason for audit report. Okay, see, only financial statements, no credibility. Users will have no credibility. If you give financial statements along with the audit report, then the credibility of the users on the financial statements will increase. Okay, next, what are the standards that are dealing with audit report? If you see entire 700 series, there are 6 standards that will deal with audit report. See, firstly, SA-700, which deals with the format of audit report in case of unmodified opinion. Next, SA-701, which deals with key audit matter, CAM, we will discuss that. SA-705 deals with modification to the opinion of the auditor. SA-706 deals with emphasis of matter and other matter paragraph. SA-710 deals with comparative information, and SA-720 deals with auditor's responsibility with respect to other information. What is meant by other information? All this will revise. Okay, these are the 6 standards that we are going to cover or that we are going to revise in this class. Okay, now purpose of SA-700 series. Now, why the Institute of Chartered Accountants of India has given this SA-700 series and prescribed the format of audit report? See, if each and every auditor gives different format of audit report, then the users will confuse, okay, regarding the audit report. So if a standard format of audit report is maintained, then you can easily compare the audit reports of all the auditors, and it will also become easy to the users to understand the audit report. So in order to prescribe the audit report format and in order to standardize the reporting aspect in case of an audit, SA-700 series has been given. Okay, that is purpose of SA-700 series. C, to maintain consistency and comparability of audit reports. Conducting audit in accordance with SS promotes credibility in the global market. Okay, help to promote users' understandings of the audit reports. Okay, next, SA-700. Now we'll start with SA-700. I have already told you SA-700 deals with format of audit report in case of unmodified opinion, right? Now, objectives as per SA-700. What is the objective of auditor as per SA-700? See, the objective of auditor is to form an opinion on the financial statements based on the conclusions that are drawn from his audit, and therefore he will report that opinion in the form of a audit report. That is the objective of auditor as per SA-700. Okay, to form an opinion and to report that opinion, right? Next, types of audit opinions. If you see broadly, there are 2 types of audit opinions. One is unmodified opinion and another one is modified opinion. Okay, here in SA-700 we will deal with unmodified opinion. With respect to modified opinion, we will cover in SA-705. Modified opinion, again it is of three types, right? Qualified opinion, adverse opinion, disclaimer of opinion. That we will cover in SA-705. See, types of audit opinions: unmodified opinion, modified opinion. Modified opinion will deal with SA-705. Now, when auditor will give unmodified opinion, if auditor feels that the financial statements are prepared in all material respects in accordance with applicable financial reporting framework. Okay, applicable financial reporting framework means either Ind AS or accounting standards in case of India. Okay, if the financial statements are prepared as per applicable financial reporting framework and there are no misstatements in the financial statements, then auditor will give unmodified opinion. Okay, if based on the audit evidence financial statements are not free from material misstatements, auditor is unable to obtain audit evidence to conclude that financial statements are free from material misstatements. In this situation, auditor will give modified opinion. Hope that is clear. Next, elements of audit report. Elements of audit report means in the audit report there will be subheadings, right? So we'll call them as elements. What are the various elements of audit report? Let's see. First of all, you will have title. What will be the title? Independent Auditor's Report. That is the first element. Next, addressee. To whom you are addressing this audit report. Generally, you will address audit report to members, the shareholders, right? Next, opinion paragraph. In the opinion paragraph, auditor will express his opinion. Next, basis for opinion. Okay, on which basis auditor has derived this opinion, that auditor will express in basis for opinion. Next, material uncertainty related to going concern. If at all there is any material uncertainty related to going concern as per SA-570, then auditor will report the same in this paragraph. Okay, material uncertainty related to going concern. Next, emphasis of matter paragraph. Emphasis of matter paragraph will be dealt by SA-706. We will discuss about that in SA-706. Next, key audit matter dealt by SA-701. See, this is the order in which the paragraphs has to be presented in the audit report. Next, other information paragraph, which will be dealt by SA-720. Next, you will have management responsibility, auditor's responsibility. Okay, in the management responsibility, you will disclose the responsibility of the management, like preparation of financial statements, establishment of internal controls to provide the required information to the auditor, right? These are the responsibilities of management. In the same way, responsibilities of auditor to express the audit opinion. Next, other matter paragraph again will be dealt by SA-706. And signature, place of signature where you have signed, and the date of signature. Okay, date of auditor's report, on which date you are issuing audit report. So these are the elements of audit report. Now we will discuss each element one by one. Firstly, auditor's opinion. See, the first element, title and addressee, you already know that. Okay, title means independent auditor's report. Addressee, you will address whoever have appointed you. Okay, generally the members. Next, auditor will give his opinion. You will call it as auditor's opinion paragraph. Okay. Now, in the auditor's opinion paragraph, auditor has to refer to certain aspects. What are they? First of all, auditor has to identify the name of the entity whose financial statements have been audited. Okay, identify name of the entity. Next, you have to state that you have audited the financial statement. Okay, state that financial statements have been audited, and you have to recognize the name of each statement constituting the financial statement, like balance sheet, profit and loss statement. If the cash flow statement is applicable, cash flow statement, you need to identify name of each statement forming part of the financial statements. See, identify the title of each statement comprising financial statements. Next, refer to the notes. Okay, you will also give notes to the financial statements. You should also refer to that notes and specify the date or period that is covered by financial statements. Basically, the balance sheet, it will be prepared as on 31st March. So you should refer that date as on 31st March of so and so year. Profit and loss will be prepared for a period, like you should mention from 1st April 2024 to 31st March 2025. So the period you have to clearly mention in your opinion paragraph. Okay, so all these aspects needs to be referred in your opinion paragraph. Okay. Next, coming to basis for phrase to be used for unmodified opinion. Okay, if you are giving unmodified opinion, then which phrase you have to use? The phrase that you have to use will depend on the financial reporting framework that the entity is using. See, if the entity is using fair presentation framework, there are two types of frameworks. One is fair presentation framework, another one is compliance framework. What is the difference? In case of fair presentation framework, it will allow to deviate from the framework if such deviation gives more fair representation of an item. Okay, if the deviation from the framework allows more fair presentation, then such framework is known as fair presentation. Okay, a fair presentation framework. Okay, if any framework allows to deviate from the framework for preparing the financial statements, then such framework is known as fair presentation framework. Okay, and such deviation should be made when the management feels that because of such deviation it results into more fair presentation of that particular matter. Okay, in such a situation only the deviation from the framework has to be allowed. That is known as fair presentation framework. If the deviation is not allowed, you have to strictly follow the framework. Whatever might come, you have to strictly follow the framework. That is known as compliance framework. Now, if a fair presentation framework has been used, then auditor, the phrase of the auditor's opinion in case of unmodified opinion will be like this. See, in our opinion, the accompanying financial statements present fairly in all material respects, or the auditor can also use the following phrase. In our opinion, accompanying financial statements give true and fair view. Okay, you can say either present fairly or giving true and fair view. Okay. Next, if compliance framework has been used, in case compliance framework has been used, auditor has to state that financial statements have been prepared as per the financial reporting framework. That's it. See, the accompanying financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. Okay. Those are the phrases that you will be using. Next, coming to basis for opinion paragraph. Now, in the basis for opinion paragraph, auditor will express how he has derived that opinion which he has given in the opinion paragraph. Here, auditor should refer the following. See, basis for opinion paragraph shall state that the audit was conducted in accordance with the standards on auditing. Okay, for purpose of conducting this audit, we have followed standards on auditing. This point you need to mention. See, you have to mention this point only if you have actually followed all the standards on auditing. Otherwise, you cannot mention this point. Okay. Next, refers to the section that describes the auditor's responsibility under the SS. See, in this audit report, we are giving a separate paragraph, auditor's responsibility paragraph. Okay, that paragraph will be after the management's responsibility paragraph. So now in the basis for opinion paragraph, auditor has to refer that auditor's responsibility paragraph which the auditor has given in the audit report, stating that our responsibilities are as per the auditor's responsibility paragraph. Okay, you have to give such reference. Next, includes a statement that auditor is independent of the entity and he has complied with all the ethical requirements. Okay, all the ethical requirements, the 5 fundamental principles we have discussed, right? Integrity, objectivity, confidentiality, professional competence, and due care, right? Professional behavior. All these 5 fundamental principles auditor has complied, and he has also been independent during the entire audit. This point he needs to mention in the basis for opinion paragraph. Next, state whether the auditor believes that audit evidence obtained is sufficient and appropriate for the purpose of expressing the audit opinion. Okay, whether the audit evidence that the auditor has obtained is sufficient and appropriate for the purpose of expressing audit opinion or not. Okay, this point also you should mention in the basis for opinion paragraph. Hope that is clear. Now, coming to the next paragraph, which is management responsibility paragraph. In this management responsibility paragraph, you will express the responsibility of the management. What is the responsibility of the management? They are responsible for preparing financial statements in accordance with applicable financial reporting framework. They are also responsible for establishing internal controls, right? It is the responsibility of management to establish the internal controls. Okay. Next, assessing entity's ability to continue as a going concern as per SA-570, whether the entity is eligible to continue as a going concern or not. Okay, you have to, the management has to mention that it has assessed the entity's ability to entity's ability to continue as a going concern. Okay, it is the responsibility of the management to assess the entity's ability to continue as a going concern. After management has assessed, auditor will verify, okay, whether the assessment of the management is proper or not. You will find that point in auditor's responsibility paragraph. Okay, in auditor's responsibility paragraph, you will mention that auditor is responsible for verifying the appropriateness of management's assessment of entity's ability to continue as a going concern. Hope that is clear. Next, this section shall identify those responsible for oversight of financial reporting process if the persons who are responsible for implementing them are different. Okay, if the person who is, or if the people who are responsible for implementing is different from the people who are responsible for overseeing the financial statements, then you have to mention the person who is responsible for overseeing the financial statement. Okay, see, this section shall identify those responsible for oversight of financial reporting process when those responsible for oversight are different from those who fulfill the responsibility described in the paragraph. Hope that is clear. Okay, the people who have implemented the requirements of paragraph is different from the people who is having responsibility to oversee the financial statements, then you need to mention in this paragraph, in the management responsibility paragraph, the people who are responsible for oversight of the financial statement. That people you need to mention in management responsibility paragraph. Okay, next comes auditor's responsibility paragraph. Now, responsibility of the auditor is, in this paragraph, auditor needs to state that his objective is to examine, obtain reasonable assurance about whether financial statements are free from material misstatement. After obtaining reasonable assurance, he will express the opinion in the form of audit report. Issue an auditor's report that includes the auditor's opinion. Next, state that reasonable assurance is a high level of assurance but not a guarantee that audit will detect all the misstatements. Okay, in case of an audit, auditor will give only reasonable assurance. He cannot give absolute assurance. So he need to mention this point in his auditor's responsibility paragraph, stating that I will give only reasonable assurance. Reasonable assurance means a high level of assurance but not a absolute assurance. Like this, you should clearly mention in the auditor's responsibility paragraph. Okay, to avoid confusion. Next, state that misstatements can arise either from fraud or from error, and these misstatements will become material if they impact the decision making of the users. You have to mention this point. Describe that they are considered material if they could reasonably expected to influence the economic decision making of the users, or if the material misstatement is having any different definition as per the applicable financial reporting framework, then you have to mention that same definition here. Or provide definition or description of materiality in accordance with the applicable financial reporting framework. Okay, if the applicable financial reporting framework has a defined materiality in a different manner, you have to give that definition here. If the applicable financial reporting framework is silent with respect to materiality, you have to mention this point. Okay, next, still auditor's responsibilities only. Auditor exercises professional judgment and maintains professional skepticism throughout the audit. You have to mention that throughout the audit, I will exercise professional judgment, and I will also maintain professional skepticism. Okay, professional skepticism means questioning mind. Professional judgment means ability to apply all the knowledge and experience that you have obtained is known as professional judgment. Okay, in taking any decision, you have to apply all these. Okay, next, describe an audit by stating the auditor's responsibilities are to identify and assess risk of material misstatement, to obtain understanding of internal control that are relevant for the purpose of audit, to evaluate appropriateness of accounting policies used and reasonableness of accounting estimates that the management has made. Right, while preparing the financial statements, management will use various accounting policies. Management will make various accounting estimates. The auditor has to verify whether those accounting policies and accounting estimates that the management has taken are reasonable or not. Next, to conclude on appropriateness of management's use of going concern basis of assumption. Okay, in the management responsibility paragraph, we have discussed that it is responsibility of the management to assess the entity's ability to continue as a going concern. Now, auditor has to check the appropriateness of assessment that has been made by the management to evaluate overall presentation structure and content of the financial statements. Okay, these are the auditor's responsibilities. Okay, now where the auditor's responsibility paragraph has to be presented, location of auditor's responsibility paragraph, there are three options. You can include auditor's responsibility paragraph in the main audit report, in the body of audit report, or you can give the auditor's responsibility paragraph as a annexure to the audit report, or if the responsibilities of the auditor are mentioned somewhere else or in any website the responsibility of auditor is mentioned, in such a situation you have to make a reference to such website where the auditor's responsibilities have been prescribed. See, within body of auditor's report or as an appendix to the auditor's report or specific reference to location of such description on a website. Let's say for example, in case of a bank audit, the bank will make the appointment of auditor. Now bank in its website has listed the responsibilities of auditor. In such a situation, auditor in his audit report can make reference to the website of the bank wherein the responsibilities of auditor has been prescribed. Just an example I have given. Okay, next, report on other legal and regulatory requirements. See, the audit report, it will be divided into two parts. One is report on audit of financial statements. After the report on audit of financial statements is completed, at the end you will also find the second part, which is report on other legal and regulatory requirements. What will be covered here? Reporting under section 143 subsection 1 of Companies Act, reporting under section 143 subsection 3 of Companies Act. Next, CARO reporting. Next, internal controls over financial reporting. Okay, all these are reporting requirements under other laws or regulations. Okay, so all these will be given in this second part. Let us see. These are in addition to auditor's responsibilities under standards on auditing. Okay, the responsibilities of auditor under standards on auditing will be reported in the first part, that is report on audit of financial statements. In the second part, you will report this. Okay, present in separate section with the heading report on other legal and regulatory requirements. If you observe any audit report, you will find two parts. Okay, in the audit report, the first part, in the starting itself, it will be mentioned report on audit of financial statements. After the entire report is completed, at the end you will also find report on other legal and regulatory requirements. In that report you will find reporting under section 143 subsection 3 and CARO reporting. You will mention that CARO has been given as an annexure to this audit report, like this you will mention. If the internal control of financial reporting is also there, you will also mention that ICFR is also has been given as a annexure to this audit report, like this you will mention, right? All this reporting you will do in other reporting, you will do in report on other legal and regulatory requirements. Okay, see, report on other legal and regulatory requirements shall follow the report on audit of financial statements. Okay, so the audit report can be divided into two parts. One is report on audit of financial statements and the second part is report on legal and regulatory requirements. Now, if the legal and regulatory requirements is same as that of standards on auditing, okay, whatever has been required in the standards on auditing, the same has been required in some law or regulation also. In such a situation, you need not separate. Okay, you need not give two parts of the audit report. In the same single part itself, you can continue. See, same topic as is covered in standards on auditing is also prescribed by some other law or regulation. In such a situation, presented in the same section as the related report elements required by this SS. Okay, you need not present the second part. But however, there should be clear differentiation from the reporting that is required by SS. Okay, in the same section itself, you can present the reporting requirement under other law regulation also, if the requirement of other law regulation is same as that of the standards on auditing. Hope that is clear. Example for reporting and under other law regulation is section 143 subsection 3 CARO 2020. Okay, in section 143 subsection 3 there will be list of points on which the auditor has to report. There will be around 12 points on which auditor has to report, right? Next, signature. Auditor, if auditor is a sole proprietorship firm, then auditor will sign on behalf of himself, right? Shall be signed in the personal name. If auditor is partnership firm, then he will sign on behalf of his name and on behalf of his firm also. See, shall be signed in personal name as well as in firm name. Here is an example I have given. Note, mention membership number and firm registration number also. You should also mention UDIN, right? Unique document identification number you should also mention in the audit report. That is with respect to the signature. Next, place of signature. See, wherever you are signing the audit report, that place you need to mention. See, mention the city where the audit report is signed. It need not be head office of the audit firm. See, it need not be registered office of the client or the auditor. Wherever you are signing the audit report, that city name you can mention. Next, date of auditor's report. See, you should not date your audit report until and unless all the audit evidence has been obtained. Okay. You should date your audit report only after all the audit evidence has been obtained. However, you can document the audit evidence after the audit report has been given. Okay, within 60 days from the date of audit report, you can document that audit evidence. But gathering or collecting of audit evidence from the client has to be done before the date of audit report only. Hope that is clear. See, shall not be dated earlier than the date on which auditor obtains sufficient appropriate audit evidence. Okay, auditor's report prescribed by law or regulation. Okay, if any law or regulation prescribes the audit report, then in that audit report, auditor has to mention that standards on auditing have been complied while doing this audit only if standards on auditing have actually been complied. Okay, and if the law or regulation prescribes a different wording of his opinion. Okay, basically SA-700 has prescribed the wordings of the auditor's opinion, but different law or regulation as per which auditor's appointment has been made prescribes different wordings. Now, in such a situation, auditor can state that he has complied with the standards on auditing only if all the wordings mentioned in the audit opinion as per SS is also present in the wordings that is mentioned as per that other law or regulation, and the audit report that you give as per that other law or regulation, if it contains all the basic elements that we have discussed in SA-700 series, only then you can mention that the audit was conducted in accordance with standards on auditing. Okay, this is a situation if you are giving audit report as per other law or regulation. Okay, you have been appointed as per other law or regulation. Okay, if you don't follow standards on auditing, you should not mention that you have followed standards on auditing. That is simple. Okay, next, auditor's report for audits conducted in accordance with both SS and international standards on auditing or standards of other jurisdictions. Sometimes what will happen is, let's say an American company is having a branch office in India or a subsidiary in India. Now, for the Indian subsidiary, you will conduct auditing in accordance with standards on auditing, and the audit report of Indian subsidiary should also be sent to that American parent company. So, for sending the audit report of Indian company to the American parent company, the audit report has to be as per international standards on auditing, because the parent company is American company. So, in this situation, you can give same audit report for both standards on auditing and international standards on auditing only if certain conditions are satisfied. What are they? There should not be conflict between standards on auditing and international standards on auditing. Okay, that is the first situation, first point that needs to be satisfied. Next, if let's say as per standards on auditing, auditor has to mention emphasis of matter paragraph or other matter paragraph in the audit report, then as per international standards on auditing also that requirement should be there. Okay, for that particular matter, auditor should mention emphasis of matter paragraph or other matter paragraph in the audit report. Only then he can issue same audit report for standards on auditing and international standards on auditing. Okay, see, otherwise he has to give different audit reports. US company is having a branch or subsidiary in India, then auditor's report may refer SS in addition to international standards on auditing only if No conflict between standards on auditing or ESAs, that is international standard auditing, that would lead the auditor to form different opinion or not to include emphasis of matter or other matter paragraph that in particular circumstances required by SS. Okay, as per standards on auditing, auditor is required to give emphasis of matter or other matter paragraph for a particular situation, but for that particular situation, international standard on auditing is not requiring any emphasis of matter or other matter paragraph. In this situation, there is a conflict between these both standards on auditing and international standards on auditing. So here auditor cannot give same report for both of them. Okay, you have to give a separate report for standards on auditing, you have to give separate report for international standards on auditing as per their requirement. Next, there is also another condition that needs to be satisfied. See, the auditor's report include at minimum each of the elements set out in the auditor's report prescribed by law or regulation discussed above when the auditor uses layout or wording specified by the standard on auditing. Okay, at least the minimum basic elements that we have discussed in this SA-700 must be present in that audit report that the auditor gives as per that particular law or regulation. Basically, this point is for the audit report that the auditor uses as per the audit report that auditor issues as per different law or regulation. Okay, for that this point has to be applicable, right? Next, supplementary information presented by financial statements. Supplementary information means, let's say for example, auditor has prepared the not the auditor, the management has prepared profit and loss statement. In the profit and loss statement there will be sales, right? In the notes the management has given region wise sales. This is known as supplementary information. Okay, this information is not required by the financial reporting framework, even then you are giving this information. So this is known as supplementary information. Now if management gives such a supplementary information in the financial statements, whether auditor's report should also include the opinion on such supplementary information or not. Hope you understood. Okay, auditor will give his audit opinion on the financial statements. Now in the financial statements there is a supplementary information that is not required by the financial reporting framework. Now whether auditor's report should also include opinion on this supplementary financial information, the answer is it depends. You have to check whether supplementary information is integral part of financial statements. Integral part of financial statements means without having supplementary information you cannot understand the financial statements. In such a situation supplementary information will become integral part of financial statements. Okay, so if supplementary information is integral part of financial statements sorry, then obviously auditor in his audit report must give opinion on supplementary information also. If supplementary information is not integral part of financial statements, then auditor need not give his opinion on the supplementary information. Okay, when you will say supplementary information is not integral part of financial statements, when you can understand the financial statements even without having supplementary information, then you will say supplementary information is not integral part of financial statements. Okay, now when supplementary information is not integral part of financial statements, care has to be taken that there has been proper separation between supplementary information and the financial statements. Hope that is clear. See, okay, supplementary information given in the financial statements, but it is not required by the applicable financial reporting framework. Then auditor shall evaluate whether such a supplementary financial statement is integral part of financial statements. If it is integral part of financial statements, then supplementary information shall be covered by the auditor's opinion. If supplementary information is not integral part of financial statements, then evaluate whether clearly differentiated from the audited financial statements. Okay, if the supplementary information is not integral part of financial statement, then you have to evaluate whether there has been a proper separation between financial statements and supplementary information. And if not, if there is no proper separation, okay, if there is no clear differentiation, then ask the management to change the presentation of the financial statements by clearly differentiating supplementary information. Okay, if management refuses, then explain in auditor's report that supplementary information has not been audited. Okay, if management refuses to properly differentiate between financial statements and supplementary information, then auditor in his audit report has to clearly mention that the financial statements are in such a way that they are not differentiating supplementary information and the financial statements. Okay, they are looking as if they are integral part, but they are not integral part. So I am not providing any opinion on the supplementary information. Like this, you have to clearly mention in your audit report. Hope that is clear. So by this, we have completed discussion of SA-700. Okay, next we'll discuss SA-705. Let me open that PPT related to SA-705. Now moving to SA-705. Now SA-705 deals with format of audit report in case of modified opinion. See, the format of audit opinion that we have discussed, the format of audit report that we have discussed in SA-700, it remains as it is, but some changes will be made to that format if auditor wanted to give modified opinion. So what are those changes and what are types of modified opinions, and what will be the paragraphs that the auditor will give, what will be the language of the opinion paragraph in case auditor wants to give modified opinion, and in which situations which type of modified opinion will be given. All these points will be discussing in SA-705. See, SA-705, which is modifications to the opinion of the independent audit report. It deals with format and content of audit report in case auditor wants to give modified opinion. Now, scope of SA-705. See, SA-705 deals with form and content of audit report if auditor wants to give modified opinion. The same point. Types of audit opinions. See, previously in SA-700 we have discussed that there are two types of audit opinions: unmodified opinion, modified opinion. Unmodified opinion we have covered in SA-705. Modified opinion now we will cover. Now if you see this modified opinion, it is again of three types. See, first of all, unmodified opinion as per SA-700. Next, modified opinion, it can be of qualified or adverse or disclaimer. These are the three types of modified opinions. Now in this entire chapter we will be discussing in which situation which type of modified opinion will be given. See, situations when modified opinion is given. See, auditor will give modified opinion when based on his audit evidence, if auditor comes to a conclusion that financial statements are not showing true and fair view, or there are misstatements in the financial statements. See, based on audit evidence, financial statements are not free from material misstatements, or auditor is not able to obtain audit evidence to conclude that financial statements are free from material misstatements. Okay, in these two situations, auditor will give modified opinion. Which type of modified opinion, that we will see. Okay, but basically if any of these two situations is present, auditor will modify his opinion. Okay, see, if auditor expects to modify or include emphasis of matter or other matter paragraph in his audit report, he has obligation to communicate the same to those charged with governance. Okay, whenever auditor wants to give modified opinion or auditor wants to express emphasis of matter or other matter paragraph in the audit report, he is having responsibility to communicate the same to those charged with governance. Those charged with governance, I am giving modified opinion in my audit report. This is the reason. Like this, you have to communicate with those charged with governance. Okay, where this point is told, it is told in SA-260, communication with those charged with governance. Okay, next, understanding the term pervasiveness. Now, before discussing the situations in which qualified opinion will be given, adverse opinion will be given, disclaimer of opinion will be given. Okay, before understanding those situations, you have to understand one particular term, that is pervasiveness. Okay, what is meant by pervasiveness? Now here in this context we will be using the term pervasiveness with respect to the misstatements. Okay, pervasiveness of misstatements, that means pervasiveness means spread all over. Okay, spread across various items is known as pervasiveness. Okay, Pervasiveness means not present in a single item. Okay, it is spread across the various items. That means misstatements are pervasive, means misstatements are present across the financial statements. Okay, various items have been misstated. Okay, there is misstatements in fixed assets, there is misstatements in current assets, there is misstatements in sales, there is misstatements in purchases. Like this, misstatements are in various items. Then you will call that misstatements are pervasive. Hope that is clear. Or another situation, misstatement is only in one item, but that single item represents a majority portion of financial statements. Let's take for example balance sheet. Okay, there are misstatements in inventory. Okay, only in the inventory there are misstatements, but inventory constitutes 80% of the total assets of the entity. Now in this situation, even though only one item is misstated, but that misstatement is pervasive because that item itself represents most of the financial statement, right? Hope that is clear. That is known as a pervasiveness. Pervasiveness means present across various items. See, describes the effect of misstatements or possible misstatements on the financial statements. In relation to amounts, they are not confined to specific element, account or items of financial statements. If so contained, represents a substantial portion. That means misstatement is in not in one particular item. Okay, misstatement is in various items. Then you will call it as pervasiveness. Or misstatement is in one item only, but that one item represents majority portion of the financial statement. Then also you will call the misstatement as pervasiveness. Okay, the same example that I have given you. Next, in relation to disclosures, if that are fundamental to users' understanding of the financial statements. Okay, if you have not properly made the disclosures that are fundamental to the users' understanding of the financial statements, then you will say that there are misstatements in the disclosures. Okay. Now, determining the type of modified opinion. Now, in order to determine which type of modified opinion you will give, you have to remember three terms. What are they? First of all, whether audit evidence is available or not. You have to check this point. Next, whether misstatements are material or not. This is the second point that you need to check. Third point, whether the misstatements are pervasive or not. This is the third point you need to check. Okay, based on the answers that you get for these 3 points, you will decide which type of modified opinion has to be given. Let us see. Now, availability of audit evidence, that is the first point that you need to check. Next, is misstatement material? Next, is misstatement pervasive? Okay, based on the answers that you get to these 3 questions, you will decide which type of modified opinion has to be given. See, type of modified opinions. If audit evidence is available, yes, and the misstatement that you have identified is material, yes, it is material, but the misstatement is not pervasive. In this situation, you will give qualified opinion. Okay. Next, evidence is not available. You are not having evidence, but if at all there are any misstatements, those misstatements will be only material but not pervasive. In this situation also, you will give qualified opinion. Okay. Next, audit evidence is available, and based on the audit evidence, you have concluded that misstatements are material as well as pervasive. Then you will give adverse opinion. Okay. Next, audit evidence is not available, but auditor concludes that if at all there are any misstatements, those misstatements will be both material as well as pervasive. In this situation, auditor will give disclaimer of opinion. Hope this is clear. Okay, you can determine which type of modified opinion has to be given with the help of this chart. Okay, you can just take a screenshot of this chart. Okay, next. Now, when you give unmodified opinion, the format is as per SA-700, right? If you modify your opinion, then some of the paragraphs of the audit report will get affected. You have to change the terminologies of some of the paragraphs. So because of modification of your opinion, what paragraphs of the audit report are getting affected? Let's see. First of all, obviously opinion paragraph will get affected because you are modifying the opinion. So opinion paragraph will be affected. See, opinion paragraph will be affected. Now, after opinion paragraph, even basis for opinion paragraph also will get affected, right? See, basis for opinion paragraph will also get affected. After that, auditor's responsibility paragraph will also get affected if you are giving disclaimer of opinion. Okay, see, auditor's responsibility paragraph will also get affected if you are giving disclaimer of opinion. Okay, only if you give disclaimer of opinion, then auditor's responsibility paragraph will also get affected. Okay, so because of giving a modified opinion, these are the paragraphs that are being affected. Now we will see how they will get affected. Okay, so wordings of qualified opinion. So first type of modified opinion, which is qualified opinion. If the auditor wants to give qualified opinion, then how the wordings of that opinion will look like? Here auditor will use the wordings stating that except for the matter described in basis for matter paragraph, all other financial statement, okay, all other items of financial statements are showing a true and fair view. Like this the auditor will say. Okay, except for the matter, because auditor will give qualified opinion when misstatements are not pervasive. That means only one item is misstated in such. Okay, one means not exactly one, only some items are misstated. Okay, it is not pervasive, then auditor will be qualified. So auditor's opinion is qualified only with respect to these items. Okay, so he uses the terminology except for the matters described in basis for qualified opinion paragraph, financial statements are showing a true and fair view. Okay, if the financial reporting framework that has been used is fair presentation framework. Okay, see, except for the effects of matter described in the basis for qualified opinion section, when you are using fair presentation framework, you will state that. Okay, you will state that the accompanying financial statements are present fairly in all material respects. Okay, if you are using compliance framework, then you will say except for the matters described in the basis for qualified opinion paragraph, the financial statements have been prepared as per the applicable financial reporting framework. See, the accompanying financial statements have been prepared in all material respects in accordance with the applicable financial reporting framework. Okay, you have to use this terminology when you are following compliance framework. Okay, that is the wordings of qualified opinion. Next, wordings of adverse opinion. Next, if you are giving adverse opinion, you need to remember the chart. Audit evidence available, misstatements material, and they are pervasive. That means entire financial statements are misstated. Then here you will say that financial statements, entire financial statements are not showing true and fair view. See, the auditor's opinion, because of the significance of the matter described in the basis for adverse opinion section, when reporting as per fair presentation framework, the accompanying financial statements do not present fairly in all material respects, and the accompanying financial statements have not been prepared in accordance with applicable financial reporting framework. Okay, when you are using compliance framework. Hope that is clear. This is the wordings in case of adverse opinion. Next, if you give disclaimer of opinion, wordings of disclaimer paragraph. When the auditor disclaims an opinion due to inability to obtain sufficient appropriate audit evidence, then the auditor shall state that auditor does not express opinion on the financial statements. See, disclaimer of opinion means you are not claiming any opinion. That is known as disclaimer of opinion. Okay, you are not claiming any opinion. That means you are not giving any opinion. So in the opinion paragraph, you have to tell that auditor does not express any opinion on the financial statements. Why? Because he cannot obtain audit evidence and the misstatements are material and pervasive. Okay, if at all there are any misstatements, those misstatements will be material and pervasive. Because of this, I am not able to express my opinion. Okay, you have to mention this, that auditor does not express any opinion on the financial statements. Next, state that because of the significance of the matter described in the basis for disclaimer of opinion section, the auditor has not been able to obtain sufficient appropriate audit evidence. Okay, you have to clearly mention, because of the matter that I have described in the basis for disclaimer of opinion, I am not able to obtain sufficient appropriate audit evidence. Okay, you have to mention this point in the opinion paragraph if you give disclaimer of opinion. Next, amend the statement required by SA-700 which indicates that financial statements have been audited to state that auditor was engaged to audit the financial statements. Now, if you see, as per SA-700, in the opinion paragraph, you will include a particular point stating that these financial statements have been audited. Okay, this point we will include, I guess, second point, right? In opinion paragraph of SA-700, we have discussed the auditor should mention a statement saying that these financial statements have been audited. Now, if you give disclaimer of opinion, you are not expressing any opinion. Why? Because you have not done any audit. Why? Because you are not able to obtain audit evidence. So, you should mention that auditor was just engaged to audit the financial statements, but financial statements have not been audited. Hope that is clear. So those are the wordings of disclaimer of opinion. Next, basis for modification of opinion. Even the basically we have discussed that because of giving modification of opinion, 3 paragraphs will get affected. The first paragraph is opinion paragraph. How the opinion paragraph will get affected, we have seen just now. Okay, in case of qualified opinion, how it will get affected, how the wordings will change. In case of adverse, how the wordings will change. In case of disclaimer, how the wordings will change. The next paragraph that will get affected is basis for opinion paragraph, right? So the heading of the basis for opinion paragraph will change if you give modified opinion. How it will change? If you are giving qualified opinion, the heading will be like basis for qualified opinion. If you are giving adverse opinion, the heading will be like basis for adverse opinion. If you are giving disclaimer of opinion, the heading will be like basis for disclaimer of opinion. Okay, see, amend the heading basis for opinion as per SA-700 to following. What are they? Basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. Okay, like this you have to change the heading first of all. After that, include a description of the matter giving rise to modification. Okay, you have to clearly include why you are giving modified opinion. Okay, which matter has made the auditor to give qualified adverse or disclaimer of opinion, you have to clearly mention in the basis for opinion paragraph. Let me drink some water. Next, just now I have told you that you have to clearly mention why the auditor is giving qualified opinion, or why the auditor is giving adverse opinion, or why the auditor is giving disclaimer opinion. So how the auditor should mention, that will vary based on the misstatement. Let's see that. What should be included in the basis for opinion? Let's see. Okay, causes of modification. Okay, for this cause you have to, the description should be like this. For this cause, description should be like this. Okay, now let us see cause by cause. If you are giving modified opinion because of material misstatement related to specific amount in the financial statements. Okay, there is a material misstatement in a particular amount in the financial statements, because of which you are giving modified opinion. Then in the basis for modified opinion, you have to quantify the effect of that amount on the financial statements. Okay, because of that misstatement in the amount, how much amount is being affected, okay, on the financial statements, you have to quantify. If you are not able to quantify, you have to clearly specify why you are not able to quantify. Okay, see, description and quantification of effect of misstatement on the financial statements. If it is impracticable to determine and quantify, then state the fact why it is impossible to determine to quantify the effect. Okay, next, if you are giving modified opinion because of material misstatement related to narrative disclosures, then you have to explain how the disclosures are misstated. Okay, next, if material misstatement related to non-disclosure of information required to be disclosed. Okay, the applicable financial reporting framework asks to disclose particular item or particular disclosure, but in the financial statements such a disclosure is not there. Because of that, you are giving modified opinion. Then what should be included in the basis for opinion paragraph? See, discuss the non-disclosure with those charged with governance. First of all, you have to discuss with those charged with governance. Those charged with governance, in the applicable financial reporting framework, this disclosure has to be given, but in the financial statements, the disclosure is not given. Like this, you have to discuss the matter with those charged with governance. Then describe the nature of the omitted information. Okay, what is the nature of such omitted information? You need to clearly describe it in the basis for opinion paragraph. And if it is possible, since that matter is not disclosed in the financial statements, auditor can disclose that matter in the basis for opinion paragraph. Okay, whatever the matter has to be disclosed in the financial statements, that same point you can include in the basis for opinion paragraph, because it is not disclosed in the financial statements. Okay, if the law permits, you can do this also. See, unless prohibited by law or regulation, include the omitted disclosure if it is practicable to do so and the auditor has obtained sufficient appropriate audit evidence about the omitted information. Okay, next, if inability to obtain sufficient appropriate audit evidence, then state the reason because of which you are not able to obtain sufficient appropriate audit evidence. Okay, so because of these reasons, this is how you have to include in the basis for opinion paragraph. Okay, next, exclusions from the basis from opinion paragraph. Okay, what should be excluded from the basis for opinion paragraph? Now, if you see in SA-700 series, we have discussed that 4 points should be mentioned in the basis for opinion paragraph. Okay, of those 4 points, if auditor expresses disclaimer of opinion, following 2 points should not be mentioned. What are they? Reference to auditor's responsibility paragraph is not required in the basis for opinion paragraph if you are giving disclaimer of opinion, and also statement about whether audit evidence obtained is sufficient and appropriate to provide basis for auditor's opinion is also not required. Okay, even this statement is also not required in the basis for opinion paragraph if you are giving disclaimer of opinion. Okay, the remaining points, that is, auditor has acted independently throughout the audit and complied with all the ethical requirements, that point you can mention, and also the audit has been conducted in accordance with the standards on auditing, even that point you can mention. Okay, except that points, remaining these 2 points you have to remove, you should not include. Okay, next, will there be any change in auditor's responsibility paragraph in case of modified opinion? Yes, there will be a change in the auditor's responsibility paragraph only when auditor disclaims the opinion. Okay, if auditor gives qualified opinion or adverse opinion, then there will not be any change in the auditor's responsibility. Okay, auditor's responsibility paragraph will be as it is, but if auditor disclaims the opinion, then auditor's responsibility paragraph will change. Okay, here he needs to mention that auditor was appointed to audit the financial statements, but he has not audited. See, yes, only when the auditor disclaims the opinion, auditor's responsibility paragraph has to be amended to include only following. What are they? Statement that auditor's responsibility is to conduct the audit. Okay, statement that because of a matter described for the disclaimer of opinion section, the audit was not able to obtain sufficient appropriate audit evidence. Okay, you have to mention that yes, my responsibility was to conduct the audit, but because of the matter that I have described in the basis for disclaimer of opinion, I was not able to conduct the audit because I was not able to obtain sufficient appropriate audit evidence. Okay, and the statement about auditor independence and other ethical responsibilities. Okay, you should also include the statement about your independence and your ethical responsibilities. Okay, this is how the auditor's responsibility paragraph will change only if you give disclaimer of opinion. Hope that is clear. Okay, so when auditor expresses qualified opinion or adverse opinion, only 2 paragraphs will get affected. What are they? Opinion paragraph and basis for opinion paragraph. But auditor expresses disclaimer of opinion, then apart from these 2 paragraphs, even auditor's responsibility paragraph will also get affected. Okay, we have discussed this while discussing the previous chart, right? The 4th or 5th chart, while discussing that we have seen this, right? Next, unless required by law or regulation, when auditor disclaims an opinion on the financial statements, you should not include key audit matter paragraph. Okay, if you are giving disclaimer of opinion, then in that audit report you should not include key audit matter paragraph. Okay, because when key audit matter paragraph will be included. But first of all, what is key audit matter? Key audit matters are those matters that the auditor felt significant for the current period's audit. Now, when he is giving disclaimer of opinion, auditor has not at all obtained the audit evidence and auditor has not at all done the audit. Then how can he give key audit matter paragraph? Okay, so if you are giving disclaimer of opinion paragraph, you should not give key audit matter paragraph until and unless required by law or regulation. Okay. See, you should also not give other matter paragraph, other information as per SA-720. Okay, you should also not give your opinion or on other information as per SA-20 if you are as per SA-720 if you are giving disclaimer of opinion. Okay. Next, management imposed a limitation after the auditor has accepted the engagement. See, after auditor has accepted the engagement, then management has imposed the limitation, saying that you should not obtain written confirmation from the debtors, you should not obtain written confirmation from the bank, you should not attend for physical verification of stock audit, stock, like this. The management is imposing limitations after auditor has accepted the engagement. In this situation, what the auditor has to do is, see, if limitation leads to auditor express qualified or disclaimer of opinion, request the management to remove the limitation. Okay, if this limitation leads the auditor to express qualified or disclaimer of opinion, then auditor should ask the management, please remove this limitation. If management doesn't agree, you should intimate the same to those charged with governance, saying that asking those charged with governance to remove the limitation. If those charged with governance also doesn't agree, then you have to check whether you can obtain audit evidence by performing alternate procedures. See, whether it is possible to obtain sufficient appropriate audit evidence through alternate procedures. If through alternate procedures also you are not able to obtain sufficient appropriate audit evidence, see, unable to obtain sufficient appropriate audit evidence through alternate procedures also, then if possible effects of undetected misstatements could be only material but not pervasive. See, in this situation, which opinion you will give? Okay, audit evidence not obtained, misstatements if any could be material but not pervasive, you will give qualified opinion. See, qualified opinion. If misstatements if any could be both material as well as pervasive, then you will give disclaimer of opinion or you will withdraw from the engagement if it is possible. See, possible effects of undetected misstatements could be both material and pervasive. In such a situation, you will either withdraw if it is practicable or you will give disclaimer of opinion. Okay, if it is not practicable to withdraw, you will give disclaimer of opinion. Hope that is clear. Next, auditor's withdrawal SEBI LODI regulation. See, now auditor of a listed entity, if he wants to withdraw from the engagement, he cannot withdraw just like that. SEBI has imposed a responsibility on that particular auditor if he wants to withdraw from the engagement. What is that responsibility? Let us see. See, if the auditor proposes to resign as an auditor of a listed entity and he proposes to resign within 45 days from the end of the quarter, in such a situation, before resigning, auditor has to give limited review report of that particular quarter. Okay, within 45 days of the end of the quarter, you wanted to resign, then you have to give limited review report of that particular quarter and resign. Next, if you have applied for resignation after 45 days from the end of the quarter, then you have to give limited review report of that quarter as well as next quarter. Okay, of that quarter as well as next quarter. If you are resigning after you have conducted a limited review of first 3 quarters, then you can resign only after conducting limited review of 4th quarter as well as the financial audit of the complete financial year. See, after issuing limited review report of first 3 quarters, you have applied for resignation. In such a situation, you can resign only after providing limited review report of 4th quarter as well as the final audit report of the entire financial year. Okay, hope this is clear. By this, we have completed discussion of SA-705. In the next class, after this, I'll open the not next class. Okay, in this class only we will be completing all 700 series, right? I'll open the PPT of next chapter or next standard. Let me just close this. Okay, now we'll see SA-701, that is key audit matters. in format of audit report as per SA-700, we have seen one of the paragraph, that is key audit matter paragraph. So what are key audit matters, how to present them, okay, how the auditor will identify key audit matter paragraphs, all this we'll see in this SA-701. Okay, now key audit matter, what is meant by a key audit matter? See, key audit matters are those matters that in the auditor's professional judgment were of most significance in the current financial statement period audit. Okay, those items that are very much significant, significant means important for the current period audit as per the professional judgment of the auditor are known as key audit matters, and these key audit matters has to be communicated in the audit report. Okay, and this key audit matter is mandatorily applicable only for listed entities. Okay, for unlisted entities, auditor at his discretion, if he wants, he can give key audit matter paragraph, or he need not give key audit matter paragraph. Okay, that is left to the discretion of the auditor. Okay, how auditor will identify these key audit matters, that we will see. Okay, applicability of SA-701, just now I have told you. See, to all the listed entities it is mandatorily applicable, and auditor otherwise decides to communicate key audit matters in the auditor's report. Okay, in case of other entities, that is unlisted entities, if auditor decides that he wanted to communicate key audit matters, then he can give. Or key audit matters is made applicable as per requirement of any law, see, required by law or regulation to communicate key audit matter in the audit report, then also auditor will have to communicate key audit matters. Okay, next, purpose of communicating key audit matter. Now in the audit report, auditor is giving opinion, right? Again, why to communicate key audit matters? In order to increase communicative value of the audit report to the users of the financial statements or to the users of the audit report, this key audit matter has been introduced. That means auditor, he will do audit. While auditing, if he finds that any matter is very much important for the current period's audit, then auditor has to explain about that matter, how auditor has dealt with that matter to the users, right? It will increase communicative value of the audit report. So key audit matter has been introduced. See, to enhance communicative value of auditor's report and to assist users in understanding those matters that in the auditor's professional judgment were of most significant in the audit of financial statements of the current period. Okay, now auditor himself felt that these matters are very much important for the audit of current period. Now if auditor felt that they are important, means it will be useful if they are communicated to the users, right? So you can communicate them through key audit matter paragraph. Next, determining key audit matter paragraph. Now how auditor will determine key audit matter paragraph? Here there are certain steps. Now auditor, he will communicate certain matters to those charged with governance. So he will first of all take all the matters that he has communicated to those charged with governance. See, from the matters communicated to those charged with governance, identify matters that require significant auditor's attention in performing the audit. Okay, from all the matters that auditor has communicated to those charged with governance, auditor needs to identify those matters that require significant attention of the auditor. Okay, from all these matters, auditor will take up those matters where auditor feels that his attention is required. Okay, he has taken up all those matters that requires his attention. Now while selecting the matters that requires his attention, how auditor will select? First of all, auditor needs to consider the areas which are having high risk of material misstatement. See, in making the determination, consider the following. What are they? Areas of high assessed risk of material misstatement. Okay, if any of the items communicated to those charged with governance is having high risk of material misstatement, then for that particular item, auditor's attention is required. Auditor will take up that. Okay, next, significant auditor judgment relating to areas in the financial statement that involve significant management judgment. Okay, if auditor feels that for any particular item judgment of auditor is required because management has applied their judgment, those items also auditor will pick up. Next, significant events or transactions that occur during the period. Okay, from these items auditor will also pick up those items and events that are significant which have occurred during the year. Okay, all these auditor will pick up. Now from these picked up items auditor will see which are significant for the current period's audit. Okay, from these items also auditor will again further filter. See, from the matters determined above, those matters having most significant in the current period audit will be communicated as key audit matter. Okay, first of all you will take up all the matters communicated to those charged with governance. From those matters the areas which require significant attention of the auditor, that you will take up. From those items which are significant for the current period audit, that you will take up and communicate as key audit matter. Hope that is clear. Next, communicating key audit matter. Okay, how you will communicate key audit matter? In the audit report you will use a paragraph key audit matter, and in that paragraph you will communicate key audit matter. Okay, describe each key audit matter in a separate subheading. Now introductory language of this section shall be like this: key audit matters are those matters which are most significant in the audit of current financial year, and that these matters were addressed in the context of audit, and audit does not provide separate opinion on these. Okay, you have to explain the nature of key audit matter. Okay, key audit matters means those matters that are significant for the purpose of current period audit, and auditor doesn't provide any separate opinion on these matters. Okay, like this you need to explain the nature of those key audit matters in the introductory language of key audit matter paragraph. Okay, next, description of individual key audit matter. Okay, now in the key audit matter paragraph, let's say you wanted to communicate 5 matters as key audit matters. Now you have to give appropriate subheading. In that subheading you need to explain that key audit matter. How you will explain? What points you need to cover? See, you need to describe why the matter was considered to be one of the most significant. Auditor, you are saying that this is a key audit matter. Now why you consider this matter as a key audit matter, you need to explain. Okay, next, how the matter was addressed in the audit. Okay, you are saying that these are key audit matter and you have addressed them in the audit. How you have addressed them in the audit, you need to explain that in the key audit matter paragraph. Okay, for each key audit matter. Next, description of each key audit matter shall include a reference to the related disclosures, if any, made in the financial statement. Okay, if at all any description of this key audit matter has been made in the financial statements, then auditor has to make a reference to that description in the financial statements. Okay, circumstances where matter determined as key audit matter is not communicated. Okay, when will you not communicate a matter even though it is determined as a key audit matter? See, if law or regulation precludes the auditor in the public interest, okay, this matter is a key audit matter, but law or regulation says that even though that matter is a key audit matter, you should not communicate it, then auditor should not communicate it. Or auditor feels that the positive impact of communicating this key audit matter is lesser when compared to the negative impact that will generate. Okay, in the situation also auditor will not communicate key audit matter. See, auditor determines the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Let's say, for example, the entity has developed a formula with respect to certain medicine. Now auditor considers this as key audit matter. Now if auditor communicates about this formula in his audit report, this formula will be leaked to all the people, right? So this will cause loss to the entity. So here adverse effect of communicating key audit matter is more when compared to the benefit of communicating the key audit matter. So auditor should not communicate key audit matter even though it is a key audit matter. Okay, yes, this shall not apply if entity has already disclosed the information publicly. Okay, if that information is already available publicly, then it doesn't cause any new loss because of communicating this matter, because it is already available in a public, so you can communicate. Okay, next, what if there are no key audit matters to be communicated? See, in case of listed entity, if there are no key audit matters to be communicated, then you have to specify the same, that there are no key audit matters to be communicated. Okay, see, Include a statement to this effect in a separate section of the auditor's report under the heading key audit matters. Okay, under key audit matters, you have to say that there are no matters to be communicated as key audit matters, but you have to include key audit matter paragraph in the audit report of a listed entity. You cannot skip that paragraph. Okay, you must include the paragraph key audit matter paragraph. Okay, if there are key audit matters, you will communicate. If there are no key audit matters, you will say that there are no key audit matters. Hope that is clear. Okay, by this we have completed discussion of key audit matter paragraph SA-701 in the. Okay, now I will open the PPT of SA-706, emphasis of matter and other matter paragraph, right? Yes, now moving to SA-706. SA-706 deals with emphasis of matter and other matter paragraph. Okay, in this standard we will be learning what is meant by emphasis of matter paragraph, what is meant by other matter paragraph, when we will be using this EOM paragraph and when we will be using this OM paragraph, and where these paragraphs has to be used. Okay, all these aspects we will be covering in this standard. First of all, we will see this emphasis of matter paragraph. What is meant by this emphasis of matter paragraph? Generally speaking, if auditor wants to communicate about a significant matter that has already been presented in the financial statements, okay, an item which is already presented or disclosed in the financial statements, and auditor feels that understanding of that item is very much important to the users in order to understand the financial statements, then auditor can emphasize such matter in his audit report under emphasis of matter paragraph. Okay, if you see the name of the paragraph, emphasis of matter, emphasize means you are stressing a matter that is already presented in the financial statements, which is significant for users understanding of the financial statement. Okay, those type of matters you will present or you will communicate in the emphasis of matter paragraph. See, a paragraph included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statements. Okay, the matter appropriately presented or disclosed in the financial statements, already that matter is disclosed in the financial statements, and that in the auditor's professional judgment is of such importance that it is fundamental to users understanding of the financial statements. Okay, and auditor feels that that matter is very much fundamental, very much important for the users to understand the financial statements, then auditor will communicate such matter in emphasis of matter paragraph. Okay, note, to present a particular matter in emphasis of matter paragraph, it should have already been presented or disclosed in the financial statement. Okay, if the matter itself is not disclosed or presented in the financial statements, you cannot communicate that matter in the audit report in emphasis of matter paragraph. Okay, to communicate a particular matter in emphasis of matter paragraph, it should have already been presented or disclosed in the financial statements. Next, some of the examples of emphasis of a matter paragraph. See, uncertainty relating to future outcome of exceptional litigation. Okay, there is a court case pending against the company. Okay, now if that court case turns against the company, then company have to pay certain huge sum of penalty. Now this matter is disclosed in the financial statements. Now auditor feels that this is very much important for the users to understand the financial statements, then auditor will communicate this matter in emphasis of matter paragraph. Next, significant subsequent event. Okay, an important subsequent event has been disclosed in the financial statements, it can be communicated in emphasis of matter paragraph by the auditor. Early application of a new accounting standard. Okay, a new accounting standard has been issued by MCA. Now the applicability of that accounting standard is from next year, but our entity has prepared the financial statements as per that accounting standard from current year only. So early application of accounting standard can also be communicated through emphasis of matter paragraph. Okay, provided this matter is already disclosed or presented in the financial statements. Next, A major catastrophe that has or had continues to have a significant effect on the entity's financial position. Okay, this also you can communicate in the emphasis of matter paragraph. Alert the users that financial statements are prepared as per special purpose framework. Okay, if the entity has prepared the financial statements as per special purpose framework and that is already disclosed in the financial statements, then auditor can communicate this point in emphasis of matter paragraph. Next, when financial reporting framework prescribed by law or regulation would be unacceptable but for the fact that it is prescribed by law or regulation. Okay, the financial reporting framework is unacceptable for the auditor, but for the fact that it is prescribed by law or regulation, the entity has prepared the financial statements as per that financial reporting framework. Now you can communicate this in the emphasis of matter paragraph. Okay, now you can remember that if auditor wants to communicate something about the financial statements, okay, then auditor can communicate such a matter in emphasis of matter paragraph, provided that matter is already disclosed or presented in the financial statements. Hope that is clear. Next, important points regarding the emphasis of matter paragraph. Certain important points, let us see. Auditor would not be required to modify opinion because of this matter. Okay, if auditor has the given emphasis of matter paragraph, then it doesn't mean that auditor has modified his opinion with respect to that particular matter disclosed or communicated in the emphasis of matter paragraph. Okay, you should understand that giving emphasis of matter paragraph doesn't mean that auditor has modified his opinion. Okay, and also if because of a particular matter auditor wants to modify the audit opinion, then that matter should not be presented in the emphasis of matter paragraph. Hope that is clear. There are 2 points. Okay, first point and sixth point. Sixth point is that if auditor gives emphasis of matter paragraph, it doesn't mean that auditor is modifying the audit opinion. First point is that if auditor has modified the opinion because of a particular point, then that point should not be included in the emphasis of matter paragraph. Hope you are understanding. Okay, it doesn't mean that auditor should not modify the opinion if he gives emphasis of matter paragraph. No, in the audit report, auditor can modify the opinion and also can include emphasis of matter paragraph both, but the point because of which auditor has modified the opinion should not be presented as emphasis of matter paragraph. Okay, should not be presented in emphasis of matter paragraph. Okay, certain other item because of which auditor has not modified the opinion, that item can be presented in emphasis of matter paragraph. Okay, hope you understood this clearly. Here there are 3 points to understand. First of all, giving emphasis of matter paragraph doesn't mean that auditor has modified the opinion. This is the first point that you need to understand. Next, if at all auditor has given modified opinion because of a particular point, the same point should not be communicated in the emphasis of matter paragraph. That is the second point. Next, third point, auditor can both give modified opinion as well as give emphasis of matter paragraph in the auditor's report, but the point because of which auditor has modified the opinion should not be, okay, that same point should not be presented in emphasis of matter paragraph. Hope you understood this. Next, matter has not been determined to be key audit matter. Okay, the matter which the auditor is communicating in the emphasis of matter paragraph, okay, that same matter should not have been determined as key audit matter. Okay, if auditor has determined a particular matter as a key audit matter, he will present that in key audit matter paragraph. Then why again to present it in the emphasis of matter paragraph? Okay, repetition is not required. Okay, next, use the heading that includes emphasis of matter. Okay, for emphasis of matter paragraph, the heading should be should include the term emphasis of matter. Okay, next, include a clear reference to the matter being emphasized. Okay, in the emphasis of matter paragraph, you have to clearly give a reference to the financial statements where this matter that the auditor is communicating has been presented or disclosed. Okay, there will be notes in the financial statements, right? So that particular note number you have to give reference. Okay, there should be a clear reference. Next, refer only to information presented or disclosed in the financial statements. This point we have already discussed. Okay, if the information is not at all presented or disclosed in the financial statements, how can you emphasize that matter in the emphasis of matter paragraph? It is not possible, right? Next, other matter paragraph. Now, in the emphasis of matter paragraph, auditor will communicate something about financial statements, right? Now, if auditor wants to communicate to the users about the audit that he has conducted, then he will use other matter paragraph. Okay, see, other matter paragraph is used to communicate something about the audit. Emphasis of matter paragraph is used to communicate something about the financial statements. Hope you understood. See, a paragraph included in the auditor's report that refers to matter other than those presented or disclosed in the financial statements that in the auditor's judgment is relevant to users' understanding of the audit. Okay, if auditor wants to communicate something that is relevant for the user's understanding of the audit, then auditor will communicate that matter in other matter paragraph. The auditor's responsibilities or the auditor report. Okay, if auditor wants to communicate something about the audit or auditor's responsibility or the auditor report, then auditor will use other matter paragraph. And this matter that is communicated in the other matter paragraph should not have been disclosed or presented in the financial statements. Okay. You see, we have covered this almost entire standard in around 10 to 15 minutes. The same standard in the regular class we'll discuss for 1.5 hours to 2 hours, right? We'll be discussing with examples and all those things. But since this is a revision class, I'm trying to complete this standard with utmost explanation in as much as little time as possible, so that you can quickly revise it at the time of examination, right? Sorry, this one, right? Yeah, certain important points regarding other matter paragraph. Let us see. The same points that we have discussed for emphasis of matter paragraph. If you have determined a particular matter as key audit matter, then the same should not be presented in other matter paragraph. Okay, see, this matter has not been determined as key audit matter. Next, this should not be prohibited by law or regulation. Okay, use the heading that includes other matter. Okay, for this paragraph, the heading should include the term other matter. Okay, next, finally, communication with those charged with governance. See, if auditor wants to include emphasis of matter paragraph or other matter paragraph, or if he wants to give modified opinion, then he has to communicate his intention, okay, his expectation and the wording in which he will communicate these matters. Okay, the same has to be communicated to those charged with governance. See, if auditor expects to include emphasis of matter or other matter paragraph in the auditor's report, auditor shall communicate with those charged with governance. Regarding what? Regarding the expectation that he wanted to communicate. Other matter paragraph or the emphasis of matter paragraph, and the wordings of this paragraph should also be communicated. Hope that is clear. So by this we have completed discussion of SA-706. Okay, we have hardly taken some 12 to 13 minutes, right? Now we'll shift to revision of SA-710. Let me open that PPT. Yeah, now moving to next standard, that is SA-710. SA-710 deals with comparative information. Now this comparative information, it is of two types. One is corresponding figures, comparative financial statements. See, in the financial statements, we will give the previous year period, previous year figures, right? First of all, we will present the current period figures. Beside that only we will present previous year figures. That is known as comparative information. Okay. Now, this comparative information is of two types. One is corresponding figures. Okay. In the general balance sheet or general profit and loss statement, we will give the previous year figures. That is known as corresponding figures. Okay. We also have comparative financial statements. Now here the difference is that we will give entire financial statement of the previous year for the comparison purpose in the current period also. And in case of corresponding figures, the auditor's report will not refer to that corresponding figures. Whereas if comparative financial statements are presented, auditor's report, his auditor's opinion should refer to that comparative financial statements also. Okay, we'll discuss all that. I'm just giving a brief. So SA-710. Oh. Comparative information. Okay, so the comparative information is of two types. One is corresponding figures. Corresponding figures means generally we will give, right, the figures of current year, previous year. That is known as corresponding figures. And comparative financial statements means along with the financial statements of current year, we will also give the financial statements of previous years. Okay, now the difference between these two is that in case of corresponding figures, auditor's opinion will not refer to these corresponding figures, whereas in case of comparative financial statements, auditor opinion will also refer to these comparative financial statements. Hope that is clear. Now, comparative information. What is meant by comparative information? The amounts and disclosures included in the financial statements in respect of one or more periods in accordance with applicable financial reporting framework, right? This is known as comparative information. Now, this comparative information, it is of two types. One is corresponding figures. What is meant by corresponding figures? Comparative information where amounts and other disclosures for a prior period. Okay, if you are preparing financial statements of 24-25, you will also present the amounts, figures of 23-24 as an integral part of current period financial statements. Okay, you can read the corresponding figures only with reference to the current period. Okay, see, for prior period are included as integral part of the current period financial statements and are intended to be read only in relation to the amounts and disclosures relating to the current period. Okay, you can read the corresponding figures only in relation to the current period financial statements, whereas if you include comparative financial statements, you can read comparative financial statements separately also. Okay, you can read those comparative financial statements either separately or in relation to in relation with the current period financial statements. Okay, see, next, comparative financial statements. Now, comparative financial statements is also one type of comparative information where amounts and other disclosures for a prior period are included for comparison with the financial statements of a current period, but if audited or referred to in the auditor's report. Okay, if comparative financial statements are presented by the management, then auditor's report should give opinion on that comparative financial statements also, whereas if management presents corresponding figures, auditor opinion need not refer to that corresponding figures. Okay, next, audit procedures. What are the specific audit procedures that the auditor will perform? See, auditor, he has to first of all ensure that comparative information agrees with the amounts and disclosures presented in the prior period. Okay, in the prior period you would have prepared a balance sheet to profit and loss statement. Okay, the same figures you have to get and write in the current period as corresponding figures. So auditor has to check whether the corresponding figures that are presented in the current period financial statements are matching with the figures of previous year's financial statements or not. Okay, next, accounting policies has to be followed consistently. Okay, whatever the accounting policies that you have followed in the previous period, the same accounting policies you have to copy and paste them in the current period also. Okay, you have to follow the same accounting policies. If at all there is any deviation in the accounting policy in the current period, then such a deviation has to be properly accounted for and disclosed. See, changes in accounting policies have been properly accounted in the current period financial statements. Okay, next, still the further audit procedures. See, in order to identify whether there are any possible misstatements in the corresponding figures, auditor has to perform audit procedures, okay, to obtain sufficient appropriate audit evidence that there are no misstatements in the corresponding figures or the comparative information. Okay, next, if auditor had audited the prior period financial statements, see, if the auditor has audited prior period financial statements also, okay, auditor is auditing current period financial statements and the same auditor has audited prior period financial statements also, then he needs to see or he needs to comply with the requirements of SA-560, that is subsequent events statements. He shall follow the requirements of SA-560, okay, subsequent events, because he was also the auditor of previous year. After completing the audit of previous year, some subsequent events have taken place. Whether those subsequent events were actually included in that previous year's financial statements or not, the auditor needs to once go through. Okay. Now, written representation has to be requested for all periods referred to in the auditor's opinion. Now, the auditor, he has to take written representation. Now, for which periods the auditor will take written representation? For whatever periods the auditor is referring in the audit report, for them he has to take written representation. Now, in case of corresponding figures, auditor will refer only current period in his audit report. So, in case corresponding figures are presented, auditor will take written representation only for current period. If in case comparative financial statements are presented, auditor in his audit report should refer to those comparative financial statements also. So, auditor will ask for written representation for all the periods of which comparative financial statements are presented in the current period financial statements. Okay. Now, reporting with respect to corresponding figures, that means just the amounts of previous year are presented as an integral part of financial statements. Now, in this situation, what will be the reporting aspect? Let's see. Auditor's opinion shall not refer to corresponding figures except in the following cases. Okay, we have already discussed. If corresponding figures are presented, auditor should not refer to such corresponding figures in his audit report, right? But there are exceptions. That means in these exceptional situations, auditor has to refer in his audit report even the corresponding figures. What are those exceptions? We'll see. Prior period included a modified opinion and matter which gave rise to modified opinion is unresolved. See, in the prior period, the auditor has expressed modified opinion, okay, either qualified or advised or qualified or disclaimer, and the matter which have given rise to such a modification is still unresolved in the current period also. In such a situation, even though in the financial statements corresponding figures are presented, auditor in his audit report should refer to corresponding figures stating that the opinion with respect to the corresponding figures was modified in the previous period and the same has not yet been resolved even in the current period also. Okay, like this, auditor will make a reference to the corresponding figures. Hope that is clear. If the matter which gave rise to modification of the corresponding figures is not yet resolved. Next situation in which auditor will make a reference to the corresponding figures. If if auditor has sufficient evidence that a material misstatements existed in the financial statements of prior period which was not addressed earlier. See, in the prior period there is a material misstatement that material misstatement was not known in the prior period, but during the audit of current period that material misstatement has come out. Now auditor came to know that that material misstatement is not addressed, that is carried forward. In this situation also the corresponding figures there is material misstatement, right? So auditor will refer to corresponding figures in his audit report of the current period. Okay, simply you can remember that if there is a material misstatement in the prior period and it has not been resolved, it is carried forward now also, then you have to refer to the corresponding figures in your audit report. In except these two situations, you need not refer corresponding figures in your audit report. Whereas if you are giving comparative financial statements, you must refer comparative financial statements in your audit report. Okay, you must give your opinion on the comparative financial statements also. Next, reporting with respect to comparative financial statements. See, auditor's opinion shall refer to each period of which financial statements are presented, right? Next, if auditor's opinion on prior period financial statements in current period differs from the opinion previously expressed, disclose the reasons for the same in other matter paragraph. Now what is this? See, auditor, see, first of all, management has presented comparative financial statements in the current period. That means the financial statements of previous year are also presented in the current period. Now, in the previous year also, auditor would have audited those financial statements and he would have expressed the opinion. And in the current period, since comparative financial statements are presented, auditor should also express the opinion on comparative financial statements also. Now, while expressing the opinion on comparative financial statements, auditor is deriving a different opinion than the opinion that he has previously given on the previous year's financial statements. In such a situation, auditor has to give this matter in other matter paragraph, stating that in the previous year I have given this opinion on the previous year financial statements, but the same financial statements have been presented as comparative financial statements in the current period, but I am giving this type of opinion, a different opinion on comparative financial statements. Why? What is the reason? You have to explain clearly in the other matter paragraph. Hope this is clear. Okay, you can say this is important. You need to remember this. Okay, next. Material misstatement in the prior period financial statement, but predecessor auditor reported without modification. See, the previous year financial statements are audited by some other auditor, and that auditor has not reported a material misstatement. Okay, there is a material misstatement in the financial statements of previous year, but that auditor has reported without modifying the opinion. He has given unmodified opinion. Now, the current auditor has found out that there is a material misstatement and that has to be corrected. Now, the management has to communicate the same to the predecessor auditor. Okay, you auditor, during the audit you found that there are misstatements in the prior period. Now you have to tell the management in the previous year audit or in the previous year financial statements there are misstatements, but the auditor has given unmodified opinion. You please communicate the same to the predecessor auditor. Now management will communicate to the predecessor auditor. Now if management changes the previous year's financial statements and predecessor auditor also changes his audit report, then the auditor, the present auditor, need not refer to that modified opinion. Okay, he can just give his opinion on the current period financial statement. See, communication with management and those charged with governance, and request the predecessor auditor to be informed. If prior period financial statements are amended and predecessor auditor issues a new report, current auditor shall report only on the current period. Okay, if predecessor auditor doesn't give a new report, then current period auditor should give a different opinion on the comparative financial statement also. Okay, next, this reporting, it is common for both, whether it is comparative financial statements or it is corresponding figures. See, in case of corresponding figures, you have to remember that you should not refer to the corresponding figures in the audit report except if there are misstatements in the previous period and they are not resolved. Okay, Next, coming to comparative financial statements. In case of comparative financial statements, you have to refer comparative financial statements in the current period also, in the current period audit report also, that you need to remember. Next, coming to the reporting that is common to both. See, prior period financial statements audited by predecessor auditor. Okay, the prior period financial statements are audited by predecessor auditor, and in such a situation, okay, if at all the prior period financial statements are audited by predecessor auditor, then the current auditor in his audit report in other matter paragraph, he must tell that previous year's financial statements audited by some other auditor. See, prior period financial statements audited by predecessor auditor, and type of opinion that he has expressed. Okay, what type of opinion predecessor auditor expressed, you have to communicate in the other matter paragraph. Next, date of that report. What is the date of that report? You should communicate in other matter paragraph. See, this has to be communicated in both the situations, whether management has presented corresponding figures or the management has presented comparative financial statements. In both the situations, auditor in the other matter paragraph, auditor means which auditor? Current auditor in the other matter paragraph has to mention that previous year's financial statements audited by predecessor auditor, and the type of opinion that he has expressed, and the date of audit report of that previous year's financial statements. Okay. Next, prior period financial statements are not audited. If prior period financial statements are not audited, in the other matter paragraph, you have to mention the same. See, state in other matter paragraph that comparative financial statements are unaudited. Okay. So, this is SA 710. Now we will move to SA 720, the last standard of this 700 series. Yes, this standard SA-720, we will discuss it from our audit concise book. Okay, for this there is no PPT, we will directly discuss this from our concise book. Yeah, SA-720. Now this SA-720 deals with auditor's responsibility with respect to other information. Now you can get it out. What is meant by other information? Now if you see, the entities, the companies, they will present their financial statements to the users in the form of an annual report. Okay, there will be this much of book, you will call it as annual report. Now in that annual report, the companies will present financial statements, audit report. Okay, apart from audit report and financial statements, there will be various other information that will be included in this annual report. Okay, that all other information that is included in the annual report apart from the financial statements and audit report is known as other information. Okay, now auditor is having certain responsibility with respect to other information. Okay, see, auditor will not express any opinion on the other information, but since the financial statements and audit report are given along with that other information, auditor has to ensure that the other information is not inconsistent with this financial statements and audit report. Hope that is clear. So for that purpose, auditor should read the other information and he has to check whether this other information is matching with the financial statements and the knowledge that he is already having. Okay, that is the auditor's responsibility as per SA-720. If you see, I have explained the entire SA-720 in just 1 minute. Okay, this is the crux of SA-720. Now see, annual report, the definition of annual report they have given just now, we have discussed, right? The companies, they will give the financial statements and audit report in the form of an annual report. This annual report will contain various other information like the sales growth, various ratios, management report, directors report, okay, chairman's message, like this various information will be there in this annual report. All this information together you call as annual report. Okay, and other information just now I have told you. Okay, in the annual report, apart from financial statements and audit report, remaining all other information is known as other information. Okay, next, examples of such other information. See, what will be such items that will be included in the annual report? Let's see. Summary of key financial results, capital expenditure segment wise that has been made by the entity, financial measures or ratios, explanation of critical accounting systems and related assumptions, identification of related parties, general description of business environment and outlook. Okay, like this various other information will be included. Okay, if you want you can just search on the Google for the annual report of Reliance Industries or annual report of TCS or Wipro. You will find, okay, some 300-400 pages of PDF you will find. You can go through it. Okay. Now objectives. What is the objective of the auditor as per SA-720? See, objective of the auditor is to consider whether there is a material inconsistency between what? Between other information and the financial statements. See, other information and the financial statements, or other information and the knowledge that the auditor has obtained during the audit. See, other information and the auditor's knowledge obtained during the audit. Auditor has to check whether there is any material inconsistency between these two. If at all there is a material inconsistency, auditor has to report accordingly. See, respond accordingly. This is the objective of the auditor. Now, obtaining the other information, how the auditor will obtain other information? Obviously he will ask the management, because management prepares the other information, right? So auditor will discuss with the management, you will prepare annual report. So in that annual report, what information you are giving? Then management will respond, we are including this information, we are including that information. Like that management will respond. Once management says that, auditor will ask management, before giving that information to the public, you please once give me that information so that I will read that information. Okay, in case of audit of, see, mostly auditor should try to get this other information from the management before the date of audit report. Okay, before the auditor signs the audit report, okay, before that date only, auditor should take this other information from the management and should read this and find out whether there is any inconsistency between this other information and the financial statements. However, in such certain exceptional situations, management might have not yet prepared that other information. In such a situations, auditor can sign the audit report, but auditor should take a written representation from the management, asking the management that you should provide me the other information once it has been prepared, before you furnish that other information to the public. Okay, before you issue the other information to the public, you have to first of all give it to me. After I read it, only then you can issue to the public. Like this, you have to take a written representation from the management. See how the auditor will obtain other information. He will, by discussion with the management, will get to know what is included in the annual report, and that will be other information. Now, make appropriate arrangements with the management to what? To obtain in a timely manner, if possible, prior to the date of audit report, all the other information that is included in the annual report, that is the final version of the documents. If in case, see, when some or all of the documents determined in will not be available until after the date of auditor's report, in such a situation, auditor can sign the audit report, but take a written representation that final version of the documents will be provided to the auditor prior to its issuance to the public. Okay, prior to its issuance by the entity. Okay, this way auditor will obtain other information. Now, once auditor obtains other information, what he has to do? He has to read it. Okay, while reading it, what the auditor has to do? Auditor has to see whether this information is not consistent with the financial statement. Auditor has to find out that whether this information is not consistent with knowledge of the auditor that he has obtained. Okay, he has to see that. See, auditor shall read the other information, and while reading, he shall consider whether there is a material inconsistency between other information and the financial statements, or material inconsistency between other information and the knowledge of the auditor. Next, while reading the other information, auditor shall remain alert for indications that other information not related to the financial statements or auditor knowledge might in the audit appears to be materially misstated. Okay, not only this, the auditor should also check other information that is irrelevant for the purpose of financial statements and other information that is not relevant with respect to the auditor's knowledge, whether such a type of other information is also misstated. Auditor has to check this. Okay, not only he should check not only that the other information is not inconsistent with the financial statements and auditor knowledge. Okay, if other information is having nothing to do with financial statements or the auditor's knowledge, even then auditor has to see whether that other information is misstated. Okay, next. Now if he finds that there is a inconsistency between other information and the financial statement, see, auditor has not yet found misstatement, he just found inconsistency, okay, not matching, okay, other information is not matching with the financial statement or other information is not matching with the knowledge of the auditor. In such a situation, what he has to do, he has to first of all communicate with the management, other information is not matching with the financial statement, other information is not matching with my knowledge, okay, like this he has to communicate. After that he has to verify where the misstatement exists, okay, just because of the fact that other information is not matching with the financial statement, it doesn't mean that other information is misstated, okay, even the financial statements might be misstated, okay, other information might be correct only, financial statements might be misstated, that is the reason why both might not be matching. So auditor has to identify where the misstatement exists, whether the misstatement is in the other information or the misstatement is in the financial statement or the misstatement is in the auditor's knowledge that he has obtained, okay, that he needs to identify. See, if auditor identifies that material inconsistency appears to exist, see here auditor has not yet identified misstatement, he just identified inconsistency, okay, not matching, then see, he shall discuss the matter with management and he needs to conclude whether material misstatement of other information exists, okay, whether there is a material misstatement in other information or material misstatement of financial statements exist, or the auditor's understanding of entity and its environment needs to be updated, okay, whether he has not properly whether he has not properly gained the knowledge about the entity during the audit. In such a situation he has to update his knowledge so as to match with the other information, okay. Now in this step auditor has found out misstatement, okay, either other information might be misstated or the financial statement might be misstated. See, if the financial statement is misstated, then obviously auditor will ask the management to correct the financial statement. If management doesn't correct the financial statement, then auditor will give modified opinion, okay, either qualified, advised or disclaimer. That is a separate issue that we have discussed in SA-705. Now what if there is a misstatement in other information, then how the auditor will react, that we'll see. See, responding when auditor concludes that a material misstatement of other information exists. In this situation, see, if auditor concludes material misstatement exists, then auditor shall request the management to correct the other information, okay, management, in the other information there is a misstatement, you please correct it. Now if the management has corrected the misstatement in other information, then auditor will see whether management has actually corrected that other information or not. See, agrees to make the correction, the auditor shall determine whether the correction has been made or not. If refuses to make the correction, auditor shall communicate the same to those charged with governance, okay. If management refuses to make the correction in other information, then auditor has to communicate to those charged with governance, okay, higher level authority than the management. Those charged with governance, I have communicated to management that there is a misstatement in other information but they have not corrected it, you please correct it. If those charged with governance corrects this, then again auditor will check whether the correction has been made or not. If those charged with governance also doesn't correct, then what the auditor will do, then auditor will see whether this other information has been obtained prior to the date of audit report. Then see, if auditor concludes that material misstatement exists in the other information that is obtained prior to the date of audit report, in such a situation, okay, and it is not corrected by those charged with governance, in such a situation, considering the implications for the audit report and communicating with those charged with governance, okay, you have to consider implication on your audit report, okay, because of this misstatement in the other information which has not been corrected by the management, will there be any implication on my audit report, okay, will I have to give qualified opinion or will I have to give any adverse opinion or will I have to refer the uncorrected misstatement of the other information, okay, the impact he needs to analyze, or he should also check whether he has to withdraw from the engagement because of that matter. See, withdrawing from the engagement where withdrawal is possible under applicable law or regulation, okay. So this auditor has to do if other information is obtained prior to the date of audit report, Okay, here he can withdraw from the engagement because he has not yet issued the audit report. But in some situations we have discussed, the other information might not be available till the time auditor has signing his audit report. In such a situation, auditor will sign the audit report and he will give the audit report by taking a written representation from the management that management will give the audit report, will give the other information to the auditor before management publishes it. In such a situation, okay, if the auditor finds misstatement in the other information that has been obtained after the date of audit report, in such a situation, what the auditor has to do? See, if auditor concludes that material misstatement exists in other information obtained after the date of audit report, then if other information is corrected, then perform the procedures. Okay, if the other information is corrected by those charged with governance, then happy, you just check whether the correction has been made or not. If the correction has not been made, then you have to take appropriate action in order to bring to the notice of the users about this uncorrected misstatements in the other information. Okay, whatever action you want, you can take, but you have to communicate to the users of the audit report that there is uncorrected misstatement in the other information. See, if other information is not corrected after communicating with those charged with governance also, you have to seek to have the uncorrected material misstatements appropriately brought to the attention of users for whom the audit report is prepared. Okay. Next, reporting. Now, if you see in the audit report, you will find a paragraph with the name other information. Okay, or you will find a paragraph with the name auditor's responsibility with respect to other information. Like this, you will find a paragraph in the audit report. You can check. Okay. Now, in case of listed entities, this other information paragraph will be there because auditor will include other information paragraph in the audit of listed entities if he has obtained the other information or he expects to obtain the other information. Okay, whether he has obtained the other information or he expects to obtain the other information from a listed entity, then he will include other information paragraph in the audit report. But in case of unlisted entity, he will include other information paragraph in the audit report only if he has already obtained the other information. Okay, if he expects to obtain the other information after the date of audit report, then he will not include the other information paragraph in the audit report. Hope that is clear. That is the difference between listed entity and unlisted entity. See, the auditor's report shall include a separate, just a second, yeah, include a separate section with heading other information. Now, for an audit of financial statements of listed entity, the auditor has obtained or expects to obtain other information. In both the situation, you will include other information paragraph. But in case of audit of unlisted entities, auditor has obtained some or all of the other information. Only then you will include other information paragraph. Okay, only if you have obtained the other information, only then you will include. Okay, based on your expectation, you will not include other information paragraph in the audit report in case of unlisted entities. Next, just a second. Next, when the auditor's report is required to include other information, then in this other information section, what auditor will mention? See, following points auditor will mention. What are they? What happened to this? Okay, see, a statement that management is responsible for the preparation of other information. See, auditor will not prepare the other information. Okay, in fact, auditor is also not having any responsibility to give opinion on the other information. Okay, he is just reading the other information in order to ensure that there is no inconsistency between financial statements and other information. That's it. He will not give any opinion on the other information also. So he needs to clearly mention that it is a responsibility of the management to prepare this other information. Okay, next, an identification of other information, if any, obtained by the auditor prior to the date of audit report. Okay, in case of listed entity, in case of unlisted entity, if at all prior to the date of audit report, if he has obtained any other information, he needs to identify that he has obtained this other information and the other information that he expects to obtain after the date of audit report. That also you need to, okay, that also in case of listed entity, information that is expected to be obtained after the date of audit report. Okay, that also you need to refer in the other information paragraph. Next, statement that auditor's opinion does not cover this other information. This is important. Okay, auditor's opinion does not cover this other information. Auditor will never give his opinion on the other information. Next, a description of auditor's responsibilities relating to the reading, considering and reporting of the other information. Okay, auditor is having responsibility of what? To read this other information. The same he needs to communicate. Next. Okay, next, when other information has been obtained prior to the date of auditor's report, then you need to include a statement that auditor has nothing to report, or if he has found out any misstatement, then he needs to include that misstatement in the other information paragraph. Okay, if the auditor finds out any misstatement, we have seen first auditor will identify the inconsistency. Based on the inconsistency, auditor if identifies misstatement in the other information, then such misstatement has to be communicated where? In the audit report, in other information paragraph. Okay, hope this is clear. So by this we have completed the discussion of SA-720 also, and so by this the entire 700 series gets completed. Okay, in this chapter still we are having Caro and reporting under Companies Act. Now I wanted to keep this video exclusively for standards on auditing, so I have stopped this discussion till 700 series standard. We will discuss Caro in a separate video. Okay, in such a separate video where I discuss Caro, I will also discuss about reporting responsibilities under Companies Act. Okay, so in the other video where I discuss Caro, in the same video I will also be discussing about the reporting responsibilities under Companies Act. So this entire video we have completed discussion of SA-700 series standard, right? So before winding up the class, a small announcement: we have launched Lecturepedia app. On this Lecturepedia app, you can practice MCQs for free of cost, and apart from these, you can also buy courses of various topmost faculties. Okay, almost all the faculties are available on Lecturepedia app and the website. Okay, you can download Lecturepedia app from the Play Store. Okay, I'll be winding up this video. We'll meet in the next video. Until then, take care. Bye bye. See you.